joining us on Power Lunch, this is Bloomberg Quint. I'm Harsha Subramanian.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this afternoon. Indian markets slide after the April wholesale price inflation comes in above estimates.
Fuel retailers hike prices for the first time after a 19-day freeze on prices.
The CBI names former Punjab National Bank MD and CEO Usha Ananthasubramanian and 2 executive directors of the bank in the first charge sheet in the Nirav Modi case.
Dena Bank stock hits a 15-year low after the RBI orders it to stop lending.
Busy news morning here on Monday, but let's first start off with the markets. Flat but slightly lower on the indices. Neeraj is here with the details. Afternoon, Neeraj.
Hey, afternoon. Might as well you do it because it's all your banks which are doing all the talking today, honestly. But no, okay, so that notwithstanding, a quick update out here. Very flat day for the markets. Wouldn't have expected anything otherwise because ahead of the verdict tomorrow, didn't expect that. If you look at the volumes picture, it'll be very, very thin as well. Even Friday's session, while there was volatility, volumes didn't pick up either on the cash side, on the F&O side, and don't expect anything otherwise today as well. 17,000 crores cash is hardly any volume to talk about. 2.5 lakh crore F&O, so nothing out there. While we are busy looking at the gainers, which is the oil marketing companies and the pharma pack, and which are indeed the 2 pockets which are doing reasonably okay today. Titan has succumbed to a lot of selling pressure after the results that have come out. So stock which nudged the 999 rupee mark is now at 925 for a company which promised a 20% CAGR growth for the next 5 years. So yes, people are taking notice of valuations which might be just too high. So Titan is down about 2.5%. The stock of the day today, undoubtedly, of course, on the gaining side has to be Sun TV though. Good numbers. Valuation gap between the leader and Sun, and which is what's playing out. 8 million shares traded, 11% gain coming out for Sun TV, and then a host of those banking names which are correcting thick and fast in the session today. Broadly, these are the parameters to watch out for. Expect volumes to remain low, guys.
All eyes. Thanks, Neeraj, for that. But as Neeraj was pointing out, it's about really what's going on in Karnataka. After a record voter turnout in Karnataka on Saturday, majority of the exit polls are projecting the Bharatiya Janata Party to emerge as the single largest party in the 224-member assembly. None of them are willing to give either party a clear majority. In a scenario like this, will the JDS emerge as the kingmaker? Kaushik Vaidya is standing by to give us a sense of breaking down the exit poll trends for us. Kaushik.
Karnataka's voters have made their choice. Through the course of voting on Saturday, a number of agencies carried out exit polls, numbers that were announced on Saturday evening once voting ended. We've put together an aggregate of about 5 polls for you and carried out a poll of sorts to give you an indication of which way this election might have gone. Remember, these are indicative numbers. The real numbers come in on Tuesday, the 15th of May. An average of those 5 seems to give the BJP around 100 seats and the Congress 90 seats. The halfway mark in that Karnataka Assembly is 112, 113. So the first takeaway seems to be all parties are short of the halfway mark. So let's disaggregate some of those exit polls for you to get a sense of which way this could be going. There is one poll from India Today My Axis that gives this as a win to the Congress. The halfway between 106 to 118 over there is 112. That is the halfway mark in the Karnataka Assembly. The rest of the polls, 4 of them, are giving the BJP around 100 seats. That leaves them about 12, 13 short of the majority mark. If that were the case, were that the way things were to unfold on Tuesday, there could be an approach that's made to Deve Gowda's JDS or any other smaller parties. Remember, there are 2 seats in this assembly that didn't go in for voting on Saturday and will be held in the next few weeks. So this aggregate that you see is from 222 out of those 224 seats. So were numbers to come down to very, very fine differences between one party and the other, this could well go down to the 2 seats where voting hasn't occurred yet.
Thanks, Kaushik, for that. Yeah, this is going down to the wire. It's going to be a very interesting contest of what plays out tomorrow on as far as the results for Karnataka is concerned. Some exit polls seem to suggest that the Congress will emerge as the single largest party, while the other believes that BJP is going to cross or at least emerge as the single largest party. Key highlight is on really the focus is on what the JDS, Kumaraswamy and former Prime Minister H.D. Deve Gowda's party will do in terms of aligning themselves towards the formation of the next government. At this juncture, it looks like, at least that's what most exit polls are predicting, that Karnataka is headed for a hung verdict. What this could mean for the, as a precursor to 2019 is anyone's guess, but at this juncture, these are the numbers in front of you. Both the BJP and the Congress Some polls believe that they're neck to neck. Some polls predict that the BJP has an edge, but no one clearly reaching that magic number of 112, 113 to form the next government. We'll get you some more voices to analyze the implications of this in just a bit. But interestingly, this is the situation, Neera, that we are in a position where even the markets are a bit nervous about what's going to happen. This has been seen as a bit of a semi-final before 2019, and it's anybody's guess who's going to form the government tomorrow. The results, of course, will be out by tomorrow.
So from the market's perspective, I presume it, best case scenario would be a clear BJP lead or a BJP, BJP being in a position to form the government?
The BJP led by Yadurappa has been extremely confident to say that they're going to form the next government for sure. Amit Shah is on record to say we are definitely forming the next government. Interestingly, Siddaramaiah, the incumbent Congress chief minister, has turned around and he said, and he's thrown a googly saying that I'm fine if the Congress High Command has a Dalit candidate as the next chief minister, almost as if admitting that they are not going to make that number of 112. Maybe that might be an olive branch to the JDS to form an alliance. Let's get an analyst into this conversation. Kamalaxi, from a political analyst, joins us on the phone line. Thank you so much, indeed, for joining us. What are you making of the exit polls? There is no clear majority coming in. Karnataka has headed towards a hung assembly.
Hung victory.
Yeah. What is the sense that you're getting?
Yes. First of all, thank you for inviting me for this. Yes, Karnataka is going to have hung victory. That is first thing. And what I see, it is a Congress is going to have majority. Single largest party is going to emerge. And JDS is not going to get any invitation from the Congress. This is one of the predictions what I'm going to do. And this time, if you see the voters turnout, that is 72.13%. Since 1950, it is the highest turnout voters. So majority of the exit polls, what they have conducted, they have said BJP. But if you see the Lingayat votes turning to the Congress, there we can see that Congress is going to emerge as a majority party in Karnataka. Tomorrow result.
So what have you made of the role that the JDS will play? Most political analysts seem to suggest that they're going to play the role of the kingmaker. Which way do you think they will swing?
Yes, they say they are the kingmaker, but in reality, what the Karnataka people have experienced before 2030 or before that, the people are too mature now. They either the Congress or the BJP are not going to invite those people. But if they crosses more than 30 seats, they will have some invitation. But JDS is going to have tussle between in the family itself.
Okay. One final question. Yesterday Siddaramaiah sort of thrown a googly of sorts, saying that he's fine if the Congress High Command appoints a Dalit face as the next chief minister. Would you say that's an admission of defeat by the Congress?
It is not so admission defeat by it's a kind of the changing attitude of the people. I can say that there's nothing wrong. Congress is known for that. Congress is always selects the people who are very more who have given more service to the party.
Okay.
It's a very well-known fact in the Congress.
Okay. We leave it there, Kamalaxi. Thank you so much indeed for joining us. I'm also joined by T.M. Veeraraghav, senior journalist who's been tracking South Indian politics for a while. Veera, what have you made of the exit poll numbers? We were just discussing that there is no clear majority or clear single largest party emerging. Some seem to suggest it's going the BJP's way, at least to emerge as the single largest party. Some others believe it's going to be the Congress. What have you made of the numbers so far?
Well, I think exit polls are confused. You're right in pointing out that the exit polls are confused. But, the fact is that directionally also they seem to be wrong in terms of which direction they would suggest. But so there's not much to make out of the exit poll numbers. But what you can sort of expect or understand from this is that there are very, very close fights in about 36 to 37 seats. And 10 seats this way, that way could mean a dramatic change for this. 100 is the magic figure for the Congress. You see, 100 to 105. It's not 112, but 100 to 105. If the Congress crosses 105, you can expect Siddaramaiah to be in charge in Karnataka. If the Congress falls below 100, you have the possibility of either a Congress-JDS combine or a BJP-JDS combine, but it would mean a defeat for Siddaramaiah because the JDS may not want him in charge of the government there. But I think the likely prediction would be to expect the Congress to cross the 100 to 105 mark. I might feel that direction, as in a speculative way, would be the way the state is going.
What then would be the role that the JDS and Kumaraswamy will play in this scenario if the situation were to arise? Will he be, as many people predict, will he hold the key to the next government?
If both the BJP and Congress fall below the 100 mark, the JDS will hold the key to the next government. Having said that, remember that the JDS is fighting for its survival. Either party with 95 plus, the Congress or the BJP with 95 plus, if they form an alliance with the JDS, over a period of time, there is a huge possibility that they can break the JDS itself. So the JDS to a large extent is fighting for survival, which is why it might not be acceptable to a very strong chief minister, someone like either a Yediyurappa or a Siddaramaiah, who have the power and potential to break the JDS. So they will have to play their cards close, but that's only if either party fall below the 100 or the 90 mark. I think, if you look at India across the board, even states like UP have been giving clear verdicts, which is why my own feeling is that, in the last minute kind of thing, one of the two parties likely to be the Congress cross the 100, 105 mark.
Veera, we'll leave it there. Many thanks, Nick, for joining us with your views. That's Veera Raghav, senior journalist, talking about the Karnataka election. The suspend ends tomorrow. Numbers will be out.
All right, and all sorts of implications of these polls. Now that the polling in Karnataka is over, Indian refiners have started to raise petrol and diesel prices once again. This is the first revision in prices in over a fortnight. Debjit Chakrabarti of Bloomberg News joins us with more. Debjit.
Yeah, hi. As you rightly said, the oil marketing companies have now lifted the 3-week freeze on the prices of petrol and diesel across the country. This despite the movement we have seen in oil prices, to which the prices of fuels are benchmarked to. Indian oil, 2 days after the elections in Karnataka, Indian oil today raised the prices of gasoline by 17 paisa in Delhi and 21 paisa per litre for diesel in Delhi. We spoke to analysts, and they are of the view that obviously this freeze was because of the ongoing elections, and this is the first time in more than almost a year since daily price revision kicked in that the oil marketing companies had held back any revision in prices for such a long stretch. We had seen some kind of a small band movement in prices even during the Gujarat elections towards the end of last year, but this is surely the longest streak where they did not revise prices even a paisa for both the fuels. Analysts we spoke to, they are saying that they have at least 2 rupees per liter to recoup losses for the freeze they had implemented almost 3 weeks back.
Debjit, we'll leave it there. Thank you so much, Nirav, for joining us. Debjit Chakrabarti talking about oil prices. Higher oil prices, meanwhile, are pinching the Indian consumer, says Oil Minister Dharmendra Pradhan. Speaking to Bloomberg's Tracy Alloway, he argued for a moderation in oil prices. Pradhan also spoke about the Ratnagiri refinery, saying the government is looking for investments both from Saudi Aramco and the Abu Dhabi National Oil Company. Listen in to a slice of that conversation.
I think on principle we have agreed to have 50% with a foreign player. Last April we had a MOU with Aramco friends, and our understanding Aramco and ADNOC are coming together as our joint venture partner with all our 3 oil majors of Government of India, Indian Oil, HPCL and BPCL. I think this is a process of formalities are on. I am hopeful both Aramco and ADNOC will be our joint venture partner in Ratnagiri refinery.
Right. Let's talk about oil then. India, famously the biggest consumer of oil, certainly the fastest growing one. We now have oil at over $75 a barrel. How concerned are you that the Iran sanctions reimposed by the U.S. will further drive up the price?
Before Iran sanction, we are of this opinion. Last April, when in the IGF forum, all the major stakeholders of energy industry came to India. my Prime Minister politely appealed to the world community for a better world, for a prospering world. The energy price must be responsible and reasonable. We don't expect a much lower oil price. We don't expect a $30–40 oil price. But the price, we are a consumer sensitive country. We are a very price sensitive country. Our consumer has their own issues. So we must expect a very reasonable price. And today I can say, before Iran sanction, the price is pinching Indian consumers.
So what do you do when it comes to Iran oil? Do you reduce your imports now because of sanctions, or do you maybe...
Let us wait and watch how things are unfolding. Everybody in this industry is watching how the new geopolitical development is emerging. Let us wait.
And what about paying for Iran oil in rupees? That was something that you considered before, entirely in rupees.
It's too early to give any opinion on that.
But the Gulf producers are still your natural partners when it comes to oil imports. So is there anything you would like to see them do when it comes to easing the market and bringing the price down?
You'll appreciate one thing, since last few years we're consistently raising one issue. We appreciate our relationship, our partnership. Yes, I do admit Gulf is our natural ally due to geographical proximity, due to cultural and historical linkage within this area. But India is consistent one thing. Recently we discussed with our colleague from China, colleague from Japan, colleague from South Korea, why we will be giving Asian premium when we are the biggest consumer, we are the substantial consumer. Why India is going to pay more price for our requirement? With this consistent point, consistent issue we are pursuing in front of our friend from GCC area, you must consider a special price mechanism, those who are taking more oil from you.
So, fastest growing consumer of oil, India, what is your take on peak demand? Because some people say it could come as early as 2020, and some people say peak demand could be in 2040 or maybe later.
My understanding of this energy industry is oil and gas is going to be there for a longer period, but we can't shy away from the technological development, from the innovation. India has recently invested more than 2 billion worth of investment in the 2G ethanol plant by government companies, by PSUs, public sector undertakings. EVs are emerging in a much faster way. India is positioning to produce 175 gigawatt of renewable energies. So technology, innovation, all these things are equalizer of the so-called peak energy demand. So it's a balancer, but yes, I do admit for a longer period, in the transportation, in the other area of energy requirement, in the domestic cooking fuel, hydrocarbon and oil and gas will be there.
Now, Iran sanctions, if imposed harshly, can take 1 million barrels a day off the market, says British Petroleum CEO Bob Dudley, speaking to Bloomberg News earlier today. Dudley spoke about the supply constraints both from Iran and Venezuela. Listen in.
I think what we've seen is a withdrawal from the agreement, which seems to be a beginning of another negotiation of some kind, but implied harshly, I mean, you could lead to 1 million barrels a day off the markets, and then of course will affect things. There's a lot of uncertainty out there, and I think that's probably more reflected in that, along with what's happening in Venezuela, that is affecting the oil price now.
But the CEO of BP talking about the impact of Iran, sanctions in Iran or oil prices. Back home, the Central Bureau of Investigation has filed a charge sheet against Usha Ananthasubramanian. This is in relation to the Nirav Modi scam. She's currently the MD and CEO of Allahabad Bank, but was the MD and CEO of PNB between August 2015 and May 2017. Her appointment at PNB overlapped with the 7-year period over which the Nirav Modi scam was allegedly perpetrated. 2 executive directors of Punjab National Bank, Sanjeev Sharan and Brahmaji Rao, have also been named in the charge sheet. Charlene D'Souza, who's been tracking this case closely, joins us on the phone. Charlene, what else do we know?
Shobha, we only know that Allahabad Bank MD and CEO Usha Ananthasubramanian has been named in the charge sheet along with 2 executive directors of Punjab National Bank, that is Sanjeev Sharan and Brahmaji Rao. They have also been named, and this charge sheet has been submitted before the CBI Special Court. Now, this FIR, this charge sheet does not name Mehul Choksi, and there will be a separate charge sheet that will be filed in the Mehul Choksi case. Also, what we know so far that Nirav Modi's wife, Ami Shah, has not been named in this charge sheet. Now, this is in regards to the complaint filed by the PNB Bank with regards to the fraudulent LOUs. Now, the investigation, now so far 19 people have been arrested in this case. We're still awaiting more details from CBI.
Charlene, thank you so much for filling us in. Charlene D'Souza reporting on the CBI filing charges against Usha Ananthasubramanian. She is the former MD and CEO of Punjab National Bank. Dena Bank, meanwhile, the stock of Dena Bank fell sharply after it became the first lender to be barred by the RBI from making any new disbursements. The regulator had put the bank under prompt corrective action, or PCA, last year, but now the RBI has tightened the screws a bit more. Ira is standing by with more on that story. Ira.
All right, so shares of Dena Bank have, naturally reacted quite badly, trading down about 8% and if you look at a longer-term chart, you will see that the stock is trading at a multi-year low. That's only to be expected because the harshest of harsh restrictions have been placed on Dena Bank, with the RBI saying that they cannot do any fresh lending. This is not something that is unprecedented. Clearly, weak banks in the past have invited similar strictures, but it's very rare. It's the rarest of rare circumstances. So let's look at what could have led to this. The first thing I do want to say is that the bank actually delayed the disclosure of this because in their statement to the exchange, they said that they had received the letter on the 8th of May, but they only disclosed it on Friday after the earnings came in. But that apart, these are the numbers. So on capital adequacy, Dena Bank is okay at 11.09%. And remember, the government has sort of ensured that most banks, most government-owned banks, have at least the bare regulatory minimum of capital. It is the net NPA and the return of assets numbers which perhaps have allowed the RBI to put this in risk threshold 2, and I'll explain to you what risk threshold 2 is in a minute. But in the latest numbers, Dena Bank disclosed that they had net NPAs of nearly 12% and the return of assets was obviously negative because they had reported a large loss. Now, the RBI's prompt corrective action framework looks at three aspects. It looks at capital adequacy, it looks at net NPA, and it looks at the return of assets. If you take out capital adequacy, because most banks seem to be meeting the regulatory minimum, then it comes down to net NPA and ROA. So look at what the three risk thresholds are and what they entail. Remember that Dena Bank has been under the PCA framework since about May of 2017. So for a year, presumably they were under level 1 of the risk thresholds because remember, neither the bank nor the RBI has given out any details. If you're in this first category, there are restrictions placed on dividends. You require the promoters to bring in fresh capital, but there are also discretionary actions, and I'm focusing on that for a specific reason, because in each category, whether it's level 2 or whether it's level 3, which is the highest risk threshold, in each category there are discretionary actions that the RBI says it can prescribe, and those discretionary actions are very wide-ranging. They could go all the way from credit-related measures to market-related measures and a whole host of things. In the most extreme of circumstances, it can also recommend amalgamation, but that is only when a bank goes beyond level 3 of the risk threshold. The reason I'm focusing on discretionary actions is because it looks like that is what the Reserve Bank of India has used in the case of Dena Bank. Because remember, there are 11 banks which are under PCA, that's the prompt corrective action. And if you just compare Dena Bank to 2 of those, I'm not even doing the full comparison, but if you take, say, IDBI Bank and IOB, for which the numbers are for the December quarter because they haven't reported their latest numbers, but Dena Bank at 11% capital adequacy is actually better off than, say, IOB, which in December quarter had 9.74% capital adequacy. Net NPAs, IDBI Bank has been well more than Dena Bank, and on return on assets, I think every public sector bank this quarter will report a large negative on the return on assets because they are adjusting to a new stressed asset framework. So the question that leaves is this action specific to Dena Bank? Should we expect other banks to fall under it? Unfortunately, there's no clarity, and it would be foolhardy to try and guess which banks would go in this direction or not. The final thing I want to say is if you look at this whole story more conceptually, now, what is the RBI trying to do? It is trying to contain the risk in some of these banks which have weakened considerably over the last 4 or 5 years. And if you want to talk about this, the root cause of all of this, it goes back to the times when lending was very rapid in 2010, 11, 12. But there is a concept called narrow banking which has existed in the theoretical realm for a very, very long time. And that narrow banking concept actually talks of a scenario where a bank is allowed to get deposits in, but a bank does not put in any of its incremental resources into lending, and it only goes into risk-free securities. So the question to ask here is that is the Reserve Bank of India moving in that direction, even though it may call it PCA rather than narrow banking? I don't know. But these are some of the questions that have been raised, Harsha, by this story of Dena Bank. Lots of sort of questions unanswered both by the bank and the Reserve Bank of India.
Okay. Hold the thought. Let's get in Ashwin Parekh, Managing Partner at Ashwin Parekh Advisory. Mr. Parekh, thank you so much indeed for joining us. How have you read this move by the Reserve Bank of India to ask Dena Bank to stop lending? What would have prompted this move? Ira just mentioned this comes under the discretionary action taken by the Reserve Bank of India. What could have prompted it to take such an extreme measure?
Well, I mean, to begin with, I wouldn't even call it an extreme measure because you see, Dena Bank has been suffering, from this challenge, for quite a while. They have burnt up a lot of their capital on NPAs in the past. And then, of course, there's something peculiar about this bank. I mean, for almost like 1 decade, it has been struggling with any particular financial model with which it can establish its niche or its role in the Western Indian market, where it is strongly present. I mean, basically, it's present between Maharashtra and Gujarat states. So it has been actually struggling, to be very honest, to establish some kind of a viability, kind of a niche for itself. I would say there are a few things. It used to be a traders bank at one point in time. They got into infrastructure funding. They've burnt a lot of money onto that. For Reserve Bank of India, there were very few options left. I mean, for the last 3 or 4 years, Dena Bank keeps on coming up again and again for different discretionary actions or the actions that the regulator or the government could have taken. Even the government under the Nationalized Banks Act could have really done in consultation with the RBI some kind of a forced merger. They were not doing that for all these years in the hope that this bank may find some way of sort of, working out of its problems, but it appears now that that's going to be too difficult. A very correct measure, I would say. The so-called narrow banking kind of an approach, its own, I mean, it has to be managed very well. It has its own set of challenges.
Right.
So, I mean, that's the kind of my first reaction to the whole thing.
Mr. Parekh, good afternoon. Ira joining in as well. Sir, just what you were saying, if you look at the basic numbers of Dena Bank, they are no better or no worse than a number of other banks in this PCA category, right? IDBI Bank being one of them. So I think the confusion that exists is whether Dena Bank was put in this category because of something outside of the numbers, and if so, would it not help if there was clarity on what exactly about Dena Bank prompted this action?
Yeah, so there were two parts to it. I mean, see, if you look at each bank, for example, it has, in fact, at least in case of, even the troubled ones, for example, let's say if you take IDBI Bank or if you take Bank of India, for example, each one of them have at least arrived at, IDBI has arrived at a retail banking kind of a plan. And there is a huge effort on the part of IDBI Bank in the last 2 years, particularly, to dispose of a lot of their unproductive assets, to also sell their NPAs, and in addition to grow their retail banking. Dena Bank somehow or the other has not demonstrated that, the ability to move in a certain direction which would bring in more viability. So, Ira, it's more than the numbers. I suppose the ability on the part of the senior management really to demonstrate effectively that they have evolved a certain plan, and they stick to that plan, they work on that plan and to show numbers or results, basically. So, I mean, even the Bank of India, for example, is making a huge effort at this point in time. The kind of NPA recovery that they talk about, I mean, is certainly something that could give a little bit of comfort to the regulator and the government. Dena Bank, some of the other, Ira, you will agree with me, has not come out with any communication and any clear plan, saying that this is what exactly for the next 3 or 4 years they'll focus to do.
Sure. Mr. Parekh, in real terms, again, I'm not sure what this is going to mean, because if you look at the loan and deposit numbers of Dena Bank, so I think their loan book has degrown, their deposit base has also degrown, at least in the last financial year. I assume that, they'll try and protect their deposit base, but the loan book will continue to fall from here.
Yes, see the loan book, since of course there is now a clear verdict from the regulator, so therefore they cannot really grow their loan book any longer. It has, and that's the point I was making earlier also, Geeta, that it has its ramifications in two different sets of challenges. One is, if the economy, if the government believes and the regulator believes that the economy is now gradually on its uptake and gradually, in fact, more and more of investment, both from the public sector and the private sector will flow. In which case, let's say, curtailing credit may not be a good answer, because then what may happen is the adverse numbers start growing and they start staring in your eye till you reach a point where you reach a hard decision in saying, are you closing this organization up or are you going to merge it with something else? So that's one dimension of it. The other dimension is with credit curtailed, then the entire focus will then totally go to recovery. And therefore, a lot will depend on the kind of assets. This is where the regulator will have to, the bank will have to engage the regulator and the government in convincing the kind of loan book it has here. In terms of whether that loan book is capable of recovering in the next 1 or 2 years, or, for example, if you're sitting on infrastructure, let's say projects or investments which are stuck up for policy decisions, including, let's say, the distribution, let's say, of power, energy, and things like those, then you are really not helping yourself by curtailing your credit. Then, in fact, you are actually bringing your doom a little faster, basically.
The message this move makes, Mr. Parekh, is that all is not well with the bank. What then would depositors do? What if they start withdrawing their money? Wouldn't that be counterproductive?
No, I doubt whether that will really happen, with our deposit holders. And the reason why I believe is that, there is a huge amount of faith and comfort that people derive, saying that it's a sovereign entity, irrespective of whatever, it may happen, whatever shape or whatever challenges it may face. There's a belief that the government will put in that money, restore, the financial position to be in a position to make to the deposit holders' monies. So that I doubt whether it could take that kind of a sharp shape, basically.
All right, Mr. Parekh, we leave it there. Many thanks for joining us, Ashwin Parekh, on the Dena Bank issue. The stock is down about 7% in trade today. Up next, emerging market growth story remains intact, says Chetan Ahya of Morgan Stanley. We'll get you a slice of the conversation on the other side.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
It doesn't matter who claims what, who has the loudest voice or the catchiest slogans. What matters is what the people decide.
Will Yediyurappa win the Lingayat vote?
Has Congress done enough to keep Bengaluru?
Or will Mysuru decide this cliffhanger?
Get ready for the deep dive, vote-wise, seat-wise.
so that the big picture is crystal clear.
From leading Karnataka to what is to unfold in 2019.
Counting day only on Bloomberg Quint.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines. Indian markets slide after the April wholesale price inflation numbers come in above estimates.
Well, the WPI touches a 4-month high in April, led by food and oil prices.
HUL is expected to report a 13% jump in profit for the March quarter. Margins too are seen improving on cost-saving initiatives.
All right, let's do a quick check on how the markets have been faring. Agam is taking a closer look at some of those key movers in the last 30 minutes. Agam.
Well, Harsha, the benchmark indices may be lower by 0.3%, but it's awfully quiet because we are looking at average turnovers in the cash market and way below average turnovers when it comes to the futures and options space. One might expect that there would be an uptick considering we have the Karnataka election results tomorrow, but that is not to be. In fact, traders are resisting taking a lot of positions in today's day of trade, and that's evident in the kind of turnover numbers that you're seeing on your screen right now. When it comes to the broader markets too, they're underperforming the major indices with substantial weakness coming in, the mid-cap as well as the small-cap indices, both taking cuts of as much as 1%. What's really keeping the markets well up and about is the pharmaceutical sector, and it's essentially the large caps. So we have Sun Pharma, Cipla, Dr. Reddy's and Lupin, well, keeping the markets afloat. But on the losing end, we have substantial weakness in some of the IT names. So even if you disregard the weakness in something like a TCS or Infosys, we have weakness in the mid-cap IT space, and that's perhaps one big reason for the weakness in the broader market indices. On the whole, a quiet day of trade, and we're looking at decline on major indices for now.
All right, thanks so much for that, Agam. The emerging market growth story remains intact, says Chetanaya of Morgan Stanley, speaking to Bloomberg News' Betty Liu. He said that the dollar depreciation is set to resume soon, and emerging markets stand to benefit from it. Listen to a slice of that conversation.
We are forecasting now dollar to resume its bearish trend, and therefore we are constructive on EM fixed income as a broader asset class.
So you're saying this is just a correction of the overbought levels that we've seen last year, that we're not seeing anything more sinister in the picture when it comes to
absolutely, and we did get some downside surprise in euro data. Essentially, the whole thing began from the fact that the dollar began to appreciate against the euro. And in the meantime, there were these concerns on what happens in protectionism risks in EM, so several other issues, and some idiosyncratic issues like Argentina and Turkey. So I think it did kind of cause a correction, but we think the fundamental trend of dollar depreciation is going to resume soon.
Yeah, I mean, Morgan Stanley, you guys termed the Fragile Five back in the day. You yourself also tweaked it back in 2016. You included South Africa, Turkey, Indonesia, Mexico, and Colombia. Now, when you assess the risks out there in the developing world, is it time to kind of rejig that description of what you think is perhaps most vulnerable in this part of the world?
We think that the EM story on a broader basis is fine. Essentially, we approach it in two manners. One is we look at the policy mix. What are they doing to monetary policy, fiscal policy, and labor market policies? And then the outcome of that in form of macro stability indicators in inflation and current account deficit. So when you take most of the large EMs on these two parameters, they seem to be fine. So therefore, we are constructive on EM growth outlook too. We expect actually the differential between US and EM's growth outlook to continue, which is actually beginning already last 4 quarters. And the fact that EM's growth is driven by capex and productivity improvement, it looks like it's sustainable.
But Chetan, just following up on Yvonne's point, though, what do you think emerging markets, and I know not all emerging markets are the same, but what are they most vulnerable to right now? What shock are they most vulnerable to?
I think the most important parameter that we were watching there is US rates and dollar. So if you do see US cost of capital rising, that transmits to emerging market through currency. And so therefore we have to watch both these trends together. And as I mentioned at the start of this discussion, we are expecting actually the dollar to begin to resume its depreciation trend. And in the background, we are not expecting 10-year bond yield to overshoot in a meaningful manner. And so therefore, we think that the backdrop does allow EMs to continue with their fundamental story, which is an improvement in growth driven by capex and productivity.
Right, bringing the conversation back home, India's wholesale price index led inflation hit a 4-month high in the month of April. If you look at the chart, you're seeing a pickup in the inflation rate for a couple of reasons. One of them is, of course, fuel, and that's the obvious one. But the more interesting part of this is the fact that cereals, which had remained deflationary for a while, have now started to turn into a positive inflation. So there was a seasonal increase in fruits and vegetable prices. Cereal category inflation, which was negative for a while now, has turned positive, and there's fuel starting to get added in. So 3.18% on the wholesale price inflation. Of course, CPI is always more important, and we'll get the CPI number later today. The expectation is that CPI 2 will rise a little bit. 4.41% is the Bloomberg News survey on CPI.
Cement. Now, rising construction activity has helped cement companies hike prices for the second straight month in May, but the quantum is not uniform across the country. Nikki Mirchandani is standing by, who's gone through a dealer survey conducted by Kotak Institutional Equities, is here with the fine print. Nikki.
Thank you. Well, cement prices have been on recovery for second consecutive month, almost offsetting the kind of weaknesses that we've seen in the month of March. However, having said that, the prices still are lower as compared to what you can see back in May 2017, when they were at rupees 349 per bag, as compared to 331 per bag that we've seen currently. The price hike seems to be more pronounced in terms of south as well as central region. If you look at the southern region, obviously there has been a sharp correction which has come in the prices in the base quarters, but then if you look at the hike, 2 consecutive months, it's almost offsets the kind of weakness that the region has seen in the month of March. So we're looking at a good 20 rupee per bag kind of hike for these 2 months for southern region. This is on account of the price hike which has been taken in Andhra Pradesh, Tamil Nadu. However, Karnataka and Kerala to an extent have seen some kind of decline, because of which that is weighing on the performance of southern region. But then if you look at the western region now, this is the second region where the price hike is actually more pronounced. It's the sharpest that we've seen amongst all the region, and also the sharpest that we've seen almost in a span of 1 year now. If you look at the hike, that's almost rupees 14 per bag that we're looking at. Second consecutive month of hike for this region as well. And if you look at the regions which have been contributing towards it, all of them have seen a good price hike. Gujarat, Goa, Maharashtra, they've all seen an uptick in terms of prices. However, moving on to another region which has actually not performed well is the northern and the central region. I'm going to pick up the central region first, where the price hike remains pretty much, for the third consecutive month, we're looking at a weakness trend prevailing for this kind of region. The same trend goes with north, where we're just not seeing any kind of demand coming in, on account of which there could be some kind of price hike which can be taken. In fact, if you look at the northern region chart there, December 2017 is when the region took a sharp hike. Post to that, either the trend has remained flat or we've seen cuts coming in for this kind of region. Back to you guys.
All right, thanks so much for that, Nikki. Private weather forecaster SkyMet has predicted an early onset of the monsoon this year. Rains will hit Kerala on the 28th of May, 4 days ahead of schedule. SkyMet predicts cloud formation to start over the Indian Ocean and Andaman and Nicobar Peninsula on the 20th of May, and then slowly move into the Bay of Bengal and Sri Lanka. SkyMet has also predicted a normal monsoon for the 3rd year in a row.
FMCG major Hindustan Unilever will report its 4th quarter numbers today. Agam is standing by with what the street is anticipating. Healthy growth expected, Agam?
So we certainly are expecting a very steady quarter for HUL, Harsha. So let me start off with revenues. We're expecting an uptick of nearly 9% year on year. And when it comes to profitability, well, we're expecting an expansion in EBITDA margins by as much as 150 basis points to around 21.5%. And consequently, we could actually see profits grow by as much as 13% year on year. Among key factors that we are watching out for is the volumes growth, expected to come in at around 5 to 6%. And this will be driven by its big brands such as Lux, Dove, Pears, as well as Vim and Wheel in the detergent space. We are also expecting a gross margins expansion of around 200 to 300 basis points, and this will largely be on inventory management, not so much the raw materials costs, which are expected to see an uptick this time around. In terms of key watchables, where we're keeping an eye on what the management has to say when it comes to rural demand, and of course a planned expenditure in advertising and marketing when it comes to putting out the big brands as far as the summer months are concerned. On the whole, expecting a steady quarter.
All right, thanks so much for that, Agam. Let's move on to the mutual fund space, trying to understand what HDFC Mutual Fund has been buying and selling. The fund manager cut stake in Axis Bank and Fortis Healthcare while increasing its stake in PSU players like NTPC, BPCL and SBI in April. It exited private majors like Axis Bank and Idea. Let's bring in Jayesh Khilnani, who's joining us with the details of the portfolio changes for the fund.
Ira, very interesting trends coming out from HDFC Mutual Fund. If you have a look at what they have increased their stake in, NTPC is the one which really stands out because they have purchased 2.1 crore shares. And remember, this is the second straight month that this has been at the top of the list of HDFC Mutual Fund. ITC, they have added about 1.6 crore shares. First Source Solutions also, the stock has been on a run up in the last month and a half. That has they have bought about 1.6 crore shares there. BPCL and SBI also among the other names where they have increased stake to the tune of about 1.4 to 1.6 crore shares. In terms of where they have decreased stake, like you were mentioning, Axis Bank, they have reduced their stake by 1.7 crore shares, followed by Idea 1.2 crore shares. Network 18, about 1 crore shares they have sold from their kitty, and Dish TV and Prism Johnson, which was earlier known as Prism Cement, they have reduced their stake in these counters as well. Where they have purchased a fresh, let's have a look at that one as well. Midhani, the IPO, they subscribed and got about 83 lakh shares on that one. Advanced Enzymes, 22 lakh shares they have purchased afresh, and the other two names, Kirloskar Ferris and HG Infra Engineering. In terms of where they have completely sold off, Fortis Healthcare tops the list over there, 28 lakh shares that they had pending, those have been sold off, followed by Team Lease Services as well. We have some of the smaller mid-cap names like APL Apollo Tubes, Dalmia Bharat, Torrent Power and SRF also go out of the portfolio of HDFC Mutual Fund.
Jay, thank you so much for that. Let's talk about Karnataka now. Economic progress is not necessarily translated to overall well-being in Karnataka. The state that attracts a substantial chunk of foreign investment into the country lags behind other states on some important socio-economic parameters, something that the new government, no matter which party comes to power, should look into address once it comes into power. Take a look. Out of time on the show. Thank you so much for joining us on lunch today.
Countdown is up next.
White shirts, कितने plain और simple. Fox